If you've been watching other people buy properties while you're stuck on the sidelines, this is your blueprint. These 5 skills will get you in the game fast. And this is Brick by Brick, where we help beginners build wealth through real estate, one property at a time. So let's break down the 5 skills that will set the foundation for your long-term success.
Sound familiar? Yeah, you're not alone. But the good news is you are in exactly the right place to finally change that. This isn't just some random video. This is your starting guide. This is how you make a move.
Look, getting into real estate isn't about some secret trick or, some lucky break. It's all about building a solid foundation, literally, brick by brick. So we're going to break down the 5 core skills that are going to set you up, not just for your first deal, but for a whole lifetime of smart investing. So think of this as your personal roadmap. First up, we're going to learn the lingo so you can actually talk the talk. Then we'll dive into analyzing deals like a total pro. After that, we'll get into the fun stuff, finding creative financing, because no, you don't need a fortune to start. We'll also cover knowing your market inside and out. And finally, we'll talk about building your power team. By the time we're done here, you'll have everything you need to lay that very first brick. All right, first things first, you wouldn't just jump into a game without knowing the rules, right? Well, real estate is exactly the same. Getting a handle on these next few terms, it's step 1. It's what makes you sound like you know what you're doing, because, well, you will know what you're doing. Let's kick things off with a big one, net operating income, or NOI. Seriously, this is the first number you should always look for. Why? Because it tells you the cold, hard truth about whether a property is actually profitable. It's all the income you bring in minus all the necessary operating costs, things like taxes, insurance, maintenance, before you factor in your mortgage payment. Basically, NOI answers one simple question. Does this property make money on its own? It's your baseline. Okay, so if NOI is the property's vital signs, the cap rate is kind of like its potential future. It's a really quick way to compare different investments side by side. Now, a high cap rate might look amazing. It screams high return, but it could also be a red flag for higher risk. A low cap rate might mean lower returns, but more stability. It's this powerful little number that helps you size up what you're really getting into.
And finally, let's get to the one that really hits home, your return on investment, or ROI. See, while NOI tells you if the property is healthy, ROI is all about your money. We're specifically talking about the cash-on-cash return. So for every single dollar you personally put into this deal, your down payment, closing costs, all of it, how much cash are you getting back each year? That's the number that tells you how hard your money is actually working for you.
All right, so you've learned some of the lingo. Now it's time to actually put it to use. Let's move on to skill number 2. You don't need some crazy, complicated spreadsheet or a finance degree to take a first look at a property. Honestly, you just need a couple of super simple but really powerful rules of thumb. In the first one, maybe the most famous one, is the 1% rule. This is your go-to back-of-the-napkin test. It's a ridiculously fast way to screen a property and just see if the rent you could collect has any chance of covering your mortgage and other expenses. If a property doesn't even pass this basic test, you can probably just move on. It saves you so much time. And this is why it's so great. Let's say you're looking at a house for $200,000. Simple math. 1% of that is $2,000. Boom, right there, you know you need to be able to charge at least $2,000 a month in rent for the deal to even start making sense. It's an instant target. Now, this part's really important. You have to use the right tool for the right job. The 1% rule, that's your best friend for buy and hold rentals, where you're focused on that monthly cash flow. But what if you want to flip a house? Totally different ballgame. And that means you need a different rule. That's where the 70% rule comes in. It's a guideline for flippers that helps them figure out the absolute maximum they should pay for a property based on what it'll be worth after it's all fixed up, what we call the after repair value, or ARV. So 2 different strategies, 2 very different rules. Okay, moving on to skill number 3. And this is a big one for so many people. It's often the one thing that stops them cold. How in the world do I save up a massive down payment? Well, here's some good news for you. You might not have to. Let's talk about some creative ways to get a deal financed. First, let's just bust the myth that you need 20% down. That is just one way to do it, and it's definitely not the only way. You can look into things like FHA loans, which are government-backed and perfect for first-time buyers. Or you could try this genius strategy called house hacking. You buy a duplex or a triplex, live in one unit, and rent out the others. Your tenants basically pay your mortgage. You can even negotiate directly with the seller for financing or team up with partners to pool your cash. The bottom line is, there are way more options than you probably think. And if you're still skeptical, just look at this number right here, 3.5%. That's the minimum down payment for a lot of FHA loans. Think about that. That single number takes the dream of owning property from some far-off someday and makes it something you could do, like right now. So let's say you found a deal that looks great on paper, and you've even got your financing figured out. You're all set, right? Well, not so fast. A great deal in a terrible market is, well, it's a terrible deal. That brings us to skill number 4, understanding why location, location, location isn't just a cheesy real estate slogan, it's everything. When you're looking at a market, you need to put on your detective hat. You're looking for clues that point to a healthy, growing area. Are jobs coming to town? Is the population growing? Are there big, stable employers around? And this is a huge one. Are the local laws friendly to landlords, or are they a nightmare? You could have the best house in the world, but if it's in a dying town with tons of red tape, you're setting yourself up for failure. You gotta do your homework here. You know, different markets really do have different personalities, and we can actually see that reflected in their average cap rates. A huge city like San Francisco or New York, that's like a blue chip stock. The cap rates are usually lower, which means your annual return is a bit smaller, but it's generally a safer, more stable bet. On the other hand, a smaller up-and-coming town is more like a tech startup. You might see higher cap rates, a bigger potential return, but it definitely comes with more risk. There's no right answer here. It's about figuring out what kind of investor you want to be. And that brings us to our 5th and final skill. And honestly, this might be the most critical piece of the whole puzzle. You can have the perfect deal and the perfect market, but you can't do it all by yourself. Real estate is a team sport, period. Your success is going to depend big time on the people you have in your corner. So let's talk about building your power team. Okay, so who's on this team? Well, here's your starting lineup. You need a great real estate agent, and I mean one who gets investors, not just families looking for a home. You need a creative lender or mortgage broker who can find you the best financing options. You absolutely need reliable contractors you can trust. And you need a sharp real estate lawyer to look over contracts and protect your interests. The key here is to start building these relationships now, way before you actually need them. Get out there, go to meetups, ask for referrals, and start building that network. Okay, wow. We've covered the 5 essential skills, so now what? Look, all this knowledge is totally useless if you don't do anything with it. Action is everything. So here's your homework. I want you to take each skill we just talked about and turn it into one small, concrete action item you can do this week. Seriously, define the terms we talked about in your own words. Use the 1% rule on just one property you find online. Look up the requirements for an FHA loan. Find the average rent in your zip code, and just have a conversation with one real estate agent or lender. That's it. This is how you get off the sidelines and into the game. Building wealth with real estate. It doesn't happen overnight. It happens one step, one decision, one brick at a time. You now have the blueprint, the person you want to be, that successful investor